Turning our attention now to the ASX, here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, brought to you today by Blackstone Minerals, ASX code BSX. I'm Matt Birney and I'm joined now by the Managing Director of Blackstone Minerals, Scott Williamson. Hi, Scott.
Hi, Matt.
Now, Blackstone Minerals is nearing the pinnacle of its strategy to both mine and refine nickel in Vietnam. Whoever said that grade is king should take a look at Blackstone's recently tabled pre-feasibility study for its Ta Qua nickel project in Vietnam that shows a multi-billion-dollar net present value and some eye-watering annual free cash numbers based on a process grade of around 0.4% nickel. It does, however, include a downstream processing or refining element that appears to supercharge the numbers. Okay, Scott, before we get into those numbers, just walk me through the strategy here in terms of both mining and refining nickel in Vietnam.
So basically we've got a large-scale open pit mine, and what's different to us from our peers is we don't just have the mine, we also are looking to build a downstream nickel refinery with our partners from the lithium-ion battery industry. So we've got two projects in one, the mine at the mine level, and then we're refining and looking to build the downstream products for the lithium-ion battery.
Okay, well, let's dive into some of the key pre-feasibility outcomes for the project with some rapid-fire questions. Firstly, what long-term nickel price did you assume in the base case, and what's the spot price today?
Yeah, so we used a US dollar $20,000 per tonne, and today it's sitting around $26,000 per tonne.
What's the mining inventory at the project?
So we've got 64.5 million tonnes at 0.41% nickel for 264,000 tonnes of obtained nickel.
And what's the initial model life of the project?
Yeah, so around 10 years at the moment and more to come.
And what sort of annual bottom line does it show after tax in terms of free cash flow?
Yeah, it's around $533 million per annum.
And what's the net present value of the project?
The base case is $1.9 billion US.
What's it going to cost to build?
So it's around $854 million for both projects, and the capital drawdown of around $770.
And how long will it take you to pay back that US $854 million?
So the base case, 1.8 years.
Okay, well, you did model up the project at $20,000 US, but if you use today's spot price, what would the annual free cash flow after tax look like then?
So that increases to $818 million per annum at today's prices.
US or Aussie?
That's US dollar.
And what about the net present value of the project? What would that go to if you use today's spot price?
Yeah, so US dollar $3.6 billion.
And how long would it take you to pay back that $854 million US capex at today's spot prices?
Yeah, capital payback of 1.3 years.
Scott Williamson from Blackstone Minerals, thanks for joining me on Bulls and Bears today. And remember, we're only here to give you information, not advice, which you should, of course, seek independently. I'm Matt Birney, and this is Bulls and Bears.
For more public company CEO interviews, go to the Money page on the 6PR, 2GB and 3AW websites and click the Public Companies tab.